Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. So today's webinar is basically how to use the Fib levels for intraday trading. So before we begin, I'd like to say that we do have several Fib levels. Like there are those that are drawn based on time zones, and then we have those that are there's one which is known as Fib fan, and then there's Fib retracement. So in this webinar, basically we're going to focus mostly on Fib retracements. Let me add data on my screen so that you're able to see exactly what I'm saying. So if you see my screen now, you should be able to see my full screen. To add Fib levels, this is an object, it's not an indicator, it's just an object on the chart. Basically, Fib levels is a percentage. Like when you have this high, assuming you have a high here, let me delete this, and then you have a low here. So we focus from this point here up to this point. This becomes like the swing high, and this becomes the swing low. So when the price is coming back down, there's only a percentage that it can come back up to. That's when the price begins to pull back down. When it begins to pull back down, there's a percentage it's actually pulling back to. So we take the difference between this point and this point, then we take a percentage of that difference and subtract it from this one, from the swing high. So assuming we have from this point to this point is 20, and the level here is 124, we take that 20, multiply it by maybe 50%, then we subtract that 50% from 124.28. That means the price is only coming back up to 50%, the difference of these two, this high and this low here. So basically that's what Fib levels means. It's just a percentage of retracement. That's we expect price to retrace from this point to this point, a percentage of a range. Like in this case, if you have a swing high here and you have a swing, you have a swing low, then we have a swing high. When the price begins to pull back down, there's just a percentage it can come back to when you looked at it from this point, from this the length of this swing high and this swing low and this swing high. So I'm not going to use this. I'm not going to use Fib levels alone. You can. It's almost. It's possible. I don't say it's impossible. It's very possible to use Fib levels alone. But personally, I use a combination of Fib levels and also another indicator. It makes more sense. I use the it's known as a zigzag indicator. I combine it with the Fib level. So when you combine those two, you get very good results. That's exactly what I'm going to do now. Let me delete this. I'll delete all this so that our screen is clear. So to add the indicator, you need to go here, insert, and then we have indicators. Then move to custom indicator. The zigzag is a custom indicator, so we want to look for it here. Unfortunately, there's no option where you can type in the name of the indicator and get it, so you have to look at it manually. We have it here. Sorry, if that does not work, because from what I'm seeing, we can't be able to click it. Go here, navigator, and then look for it. It should be here. Zigzag is here. Then drag it to your screen. So by default, I normally use the default settings. The depth should be 12, deviations should be 5, and back step should be 3. Okay, I'll make it bold so that you're able to see it clearly. The reason I'm saying this is because most people find themselves in a case where they are just they're just using the Fib levels alone, which should not be the case. We use Fib levels in combination with the zigzag indicator. So that's when you'll be able to get even more better results. If you're that person who scalps, this is the correct session for you. So we have that, we've added that already. You've seen how I add that. So there's one more thing, I've not added the other indicator. So I'm in the zigzag, I'm in the fib levels. If you look at this chart here, I'll start from this point. This one, in between this should be the swing high and this the swing low. Then as we move to the past, this becomes the swing low and this becomes the swing high. Then this becomes the swing high again, while this is the swing low. This becomes the swing high, while this is the swing low. This becomes the swing low, while the other one is the swing high. So if I want to enter trades now, I don't look at the latest one as the swing low. We start from this one and then the other one. Let me check for us. In this case, we have prices here, but the immediate one is somewhere here. So we skip this, but we start with this joint. Like you start from a point where there is this either a V or an inverted V. Look at it like this, from this point here, and then you also have these two places. So we either have this or this one. Don't start from the first. So when you move back to the past, the first line you meet is this one. This is the first, the end of the last zigzag. You don't start with this. Instead, you move back to the past where there was this V, and also where there was this inverted V. So this becomes the swing low, and this becomes the swing high. So the question is, how do you use? How are we supposed to use the zigzag or enter? I mean, how are I supposed to combine zigzag with fib levels? So I use fib levels. I use when I enter trades, I enter basically based on the zigzag indicator, but I exit trades based on the fib retracement. Get that clear? So I'll enter trades based on the fib levels. I mean, based on the zigzag indicator, but I'll exit trade based on the fib level, based on the fib levels. So my take profit is purely based on the fib levels, not even the indicator that I used for entry. So let's start from this point. We'll start off from this point here. And this, as I said at the beginning, this is really useful for those who are scalping. If you are scalping, this is really good for you. So we'll start off from 13th of May. Just a second, I want to ensure this is being recorded. Yes, okay. This is 13th of May. We have this as the swing high. This level here becomes the swing high. This one. And this level here becomes the swing low. This one. So if you want now to attach the fib levels, I'm going to add levels to these fib levels. I'm going to add, as you can see now, we have minus 61, we have 0, we have 23, we have 38, we have 61.8, we have 100. So I want to add minus 23.6. I'll also add minus 38.2 and also add minus 100. So to do that, you right click it itself, you right click the fib levels, the object themselves, until it's highlighted. That is, there's this box, there's this box, there's this box. Then you go to fib level, and then this is where you add it. So I've said I want to add minus second, copy this, minus 0.23.8, 23.6, 23.6. Here it should be 23.6, and then we'll add the next one, which is minus 38. We add that 38 to this one also should be 38.2. 0.2. So if we add that, you can now see that we have multiple ones. I've not added the 100 one, so I'll add that. That 0.1 to 1. Then we have 100. That should be minus 100, not the way we've written it. Okay. Just a second, let me confirm this. There should be 1. Correct. Now we have all of them added. So that's basically how you add levels to this indicator, to the fib levels. So we'll take this here as the swing low and this as the swing high. Then our take profit should be at 61.8% fib level. So when you have that, look at how I'm going to put this. I take this here and place it there at the swing low, and then I pick this and then place it here like this at the swing high. At the swing high. So we have when the price, this is the swing high, this is the swing low. When the price now begins to move up, and then you see that this V has been formed nicely here. When the price breaks above, at the instant when the price begins to climb above 116.86, you enter a buy position. So if you buy it here, you should have a stop loss below this one at 115.32. So we'll pick a buy position, have our stop loss here, and our take profit is fixed around 161.8. This level here. So we'll pick a buy. When the price goes above, we'll pick that buy position, and then we'll have our stop loss here, 115.32. The price, you can see from this point, this was on 13th of May. That following week, the price goes up to our take profit. So after the take profit, we don't enter anything. We only enter a buy position when the price approaches this line from the bottom and breaks above, and only on that candle. After that, there's no entry. We wait for the next entry, which should be at this swing high and at the swing low. So we'll now drag this up like this. We'll drag it up. Then we use this as the swing low. We use this as the swing low, and this as the swing high. This as the swing high, then this as the swing low. So when the price begins to move up from this point, when it's moving up, you'll find that after this, when the price has now started to go down, the fib, you cannot draw the fib level, but when the price now begins to move up and you've seen that a V has been formed here, then you can now draw the fib level with this as the swing high and this as the swing low. So you probably enter a buy here, have your stop loss at this level, at the swing low itself, and then have a take profit at 161.8. So you can see that if you enter a trade like this, you would have a good position. From this point, you had one good position. The following week, you have also one good position. Then after that, the take profit is hit here. Nothing is happening. You can see we had a swing high and swing low, but the price did not break above the swing high. So there's no way we could have entered the trade. So instead, you can see that the price again formed something here. It formed another high, a low and a high. So when anytime the price goes below, we call this the previous low and then the previous high. When the price goes below the previous low, we pick a sell. When the price breaks above the previous high, we pick a buy. So your stop loss, if you pick a sell, your stop loss is based on the previous high. When you pick a buy, your stop loss is based on the previous low. So in this case, when the price has gone below this level here, slightly below, we pick a sell, we have our stop loss here, and our take profit is at 61.8, which is somewhere around this level here. So you can see in this case the price has not reached that point, but normally when you enter like that, it gives you more precision. It like when you enter and you have a take profit like that, it makes more sense than when you just enter without any target or without knowing exactly where you're supposed to have your take profit. So we also have this one, the price continues down. This is formed again, but as you can see the price does not break below the low, so there's no trade there. And then you have this here, this is the swing high, this is the swing low. The price has successfully gone above this swing high, so we enter a buy position and have our take profit at 161.8. So you can see the price basically went up to that point, it went and hit the take profit. This is very good. So when this happens, you take the profit and then you look for the next trade. In this case we have this here. So I'll switch windows slightly. So we have that. We have this as the swing high, this as the swing low. So when you enter the trade, when the price now breaks above this high, we're supposed to enter a buy position and have our take profit there, and our stop loss should be here. Yeah, you can see clearly the price went up, it came down, it continued up, it came down, but did not reach our stop loss. So eventually the price hit our take profit. This is what we want. The next place we have this. When you have it like this, we expected price to break above. Sorry, it actually touched this high. It touched this high but did not break above. So if you took a buy here, your stop loss could have been hit already when the price came below this point. So when the price is now coming down up to this point, don't get discouraged because this is hitting the stop loss. No, have the fib levels drawn correctly again there. Take this as the swing high, take this as the swing low, then enter sell. With that sell position, have your take profit at 161, at minus 61.8, which is here. So this is a good place where if you lost the first trade, the first buy which you took here, wait and sell it there, you should have recovered some money. So this is the first trade we are seeing which has lost officially from the moment when you started it here. You take this as the swing low again. This is the swing low, this is the swing high. You have your stop loss there, and then you have your take profit at 161.8. So this one also has gone up to the take profit. So when the price broke above with this candle, you pick a buy position, hold on to that buy up to this take profit. And the price continues up. You can see we now see a new high and a new low. This is the new high, this is the new low. The price continues up, breaks above it, we pick a buy, and then you have a stop loss here. So anytime the price goes above the high, you take a buy position. Anytime the price breaks above this level, the high, the previous high, you take a buy. When the price goes below the previous low, you pick a sell. So like in this case, we could have taken a buy with our take profit at 161.8. So as the price continues up, a new high is formed and a new low is also formed. So we have this is the new high, this is the new low. We want price to either break above the 100 mark or break below 0.0 so that we pick a sell. Either way, if we buy it, we'll have a stop loss on the immediate lower low, this low, or when the price breaks below the previous low, then this will become the new high. So that means we'll have something like this. So since it has not formed yet, the V is not complete yet, we'll use this one, the previous one, which means we want a break above or we want a break below. Does this make sense? I hope it should make a lot of sense. It should make a lot of sense even as we're speaking now, that we only enter trades when the price goes above the previous high. When the price breaks that high, we'll pick a buy position. When it breaks below the previous low, we pick a sell position. That should be clear now. It should be very clear that we only enter a trade when the price goes below the previous low. We enter sell when the price goes below the previous low, and we enter buy when the price breaks above the previous high. Either way, your take profit should be at the 61.8% fib level. So like in this case, if you were to buy it, if you were to buy above this level, our take profit needs to be here, 161.8. If we were to sell it, our take profit should be at minus 61.8. So thank you very much. That should be the end of today's webinar. I will meet again next week at the center. So thank you. Say